Welcome to this week's look at the state of the New York City real estate market, where I take a look at the luxury market, the Manhattan market, and the Brooklyn market. I do it because I want you to be informed. It never hurts when you're a consumer to be informed. Welcome to this week's look at the state of the New York City real estate market. This is for the week of January 16th to the 23rd. We're going to be talking today, as we always do, about the luxury market, the Manhattan market, and the Brooklyn market. And we're going to get started first with the luxury market, which we always do. Before I get started with the luxury report, I want to thank the Olshan report for their weekly reporting on the luxury market in Manhattan. Their hard work helps me to help you. Okay, let's get started. There were 17 contracts signed in the luxury market last week, so that would be for properties priced at $4 million and above. That is one fewer than the previous week. Condos outsold co-ops 12-3, and there were 2 townhouses in that group. We're going to get started with the number one contract, apartment 114 at 217 West 57th Street. It was a sponsor unit. It was asking $63.5 million. The unit refers to the 114th floor, but it's really the 76th floor. The building has 98 stories, but the sponsor wanted to inflate the floor numbers in the building for marketing purposes. Unit 114 has over 7,000 square feet of living space. It includes 5 bedrooms, 5.5 bathrooms, and a 31 by 50 foot living room with windows on 3 sides, offering beautiful views, stunning views of Central Park and the city. The master bedroom suite has a gigantic bathroom and a sitting room, and it occupies the entire west wing of that apartment. The building is Central Park Tower. It is a 1,550-foot tall skyscraper with 179 units that started marketing in 2018 as the world's tallest residential building. Central Park Tower has over 50,000 square feet of amenities, which include indoor and outdoor pools, a fitness center, a children's playroom, and a clubroom on the 100th floor that has a ballroom, a bar, dining facilities, and a cigar lounge. A similar sponsor unit on the 115th floor closed in July for almost $44 million, and since January of 2022, 42 units have closed in Central Park Tower, averaging almost 5,200 a square foot, with an average size of almost 3,000 square feet. The number 2 contract was the 9th floor at 944 Fifth Avenue. It was asking $24.5 million. It was listed at the beginning of December, so really not on the market very long at all. The co-op has 3 bedrooms, 5.5 bathrooms, and a library. The apartment has 10.5-foot ceilings. It has large picture windows that have beautiful views of Central Park from the living room, the library, and the master bedroom. The apartment also has 2 fireplaces and central air conditioning. The monthly maintenance is a little over $19,000, and the co-op allows 33% mortgage financing. Amenities in the building include a doorman, storage, and a gym. Now we're going to take a look at the stats for last week. The total weekly asking price sales volume, $203,095,000. The average asking price, $11,976,765. The median asking price, $7,350,000. The average discount from original ask to last asking price, 3%. And the average days on market, 652. That is it for the luxury market for last week. If you have any questions, please post them below, and I'll be happy to answer them. Let's take a look now what happened last week in Manhattan. So, what happened in Manhattan last week? Well, before we get started on that, first want to thank Urban Digs for their weekly reporting on the Manhattan market and the Brooklyn markets. As always, the data that they're publishing and sharing is helping me to put these reports together and hopefully helping me to help you. What we're starting to see now is more property coming on the market. We knew this was going to start happening once we got past the holidays, but let's take a look at this first at this 1 week chart. We're looking at the supply for last week, 289, bit of a jump, 18.44%. That is the change week over week. Contract signed, 116, down almost 17%. Off market also dropped, which is meaning, we're just seeing fewer off market properties. 124 properties went off market last week. And if we step back and we look at the 1 month view, we're seeing that the supply jumped almost 35% month over month, 814 in the last month. Contract signed, 566. That's up about 5% overall. So better than that weekly view that we saw, which was down. But I'm going to get into a little bit kind of where historically we should be. And it's a little too soon to see if we're going to make that number this month. But let's keep going in the meantime. Off-market properties also dropped about 19% over the month, 779. So even though we are still in a neutral market in Manhattan, we are barely there. If we continue to see more properties coming on the market and we don't see a lot of contract activity rising commensurately, we may find ourselves kind of shifting into a market that favors the buyers. But let's keep going. We're going to keep looking at these charts. Again, here are those detailed charts that a lot of you ask me for, showing supply, pending sales, days on market, monthly closed sales, price per square foot, etc. These charts, I believe, are useful, most useful to those people who are actively in the market looking to buy or sell, and they really want to get into greater detail. So let me know if you have any questions about those charts in particular, or obviously any other questions that you might have about this week's report and what is happening in the market. If we take a look at this supply chart, you will see again, kind of historically, that we're looking at a kind of an uptick in inventory. This is up. It's still down overall. Normally we would have more supply, historically speaking. So we're down overall, but we're actually up a little bit from where we were. The demand is continuing its kind of downward trend. We're down about 0.2% in terms of demand. It really remains to be seen. Anecdotally, I can tell you that I am seeing definitely more listings coming on the market, but I'm also seeing serious buyers in this market who are stepping up and getting out to see properties to see if there's something out there that works for them. So there definitely are buyers in the market, but I think they're being understandably very cautious about rushing into things. So let's see what happens with that. As I mentioned, the new listings are up on the week, but they are lower in relationship to prior years. We saw that the contract activity fell week to week. It could be any number of things, possibly a holiday shortened week, but we'll see what happens going forward. One of the things that I thought might be interesting is, we're definitely seeing more inventory. We're not seeing a huge amount of demand, certainly not compared to what we saw in the first 2 quarters of last year. But what we're seeing, if you take a look at these charts, the price cut data month by month is suggesting that sellers are really not too worried. So we're not seeing a lot of price cuts. So if we look at price cuts by week, if you take a look at this chart, you can see that the rolling 4-week average percent of units with price cuts reveals a market on par with previous faster markets, and again supports the idea that sellers are either not or have not yet worried. So the contract activity month over month, we're not done with January yet, is about 566 contracts signed for the month. The average number of contracts signed in January, historically speaking, is 755. Hard to say if we're going to get to that number of contracts signed by the time we get to the end of January. We still have a little time left. And so I suppose we'll have to just wait and see. But that's what I meant when I said, we're certainly not in terrible shape in Manhattan. We are hanging on to this neutral market. However, as more properties come on the market, and unless we see more demand, we will likely start to shift over into buyer territory. This is certainly the time for buyers to be paying attention and making their move. Will it continue? Really hard to know. We're a little early to say definitively, but definitely if you're a buyer out there thinking about buying, this is a great time for you if you can find something that you like. And you're starting to get some more choices now, so that's all good. Okay, that is it for the Manhattan market. We're going to shift over now. We're going to take a look at what happened in Brooklyn. Okay, so here's what's happening in Brooklyn, or what happened in Brooklyn last week. We're going to take a look at the 1 week look. We always get started with that. The supply over the week was 182. That's up 10.3%. Contracts signed 70. That is down almost 20% for the week. Off market holds about the same at 76. Weekly market suggests we continue to be in a neutral market in Brooklyn. If we step back and we take a look at the 1 month view of the market, we can see that the supply is up almost, 19.4%. I was going to say 20%, but let's not call it 20%. Let's call it what it is, 19.4%. At 544, the contracts signed down almost 7%, 360, and the off-market properties, interestingly, went up a little over 26%, 435. We continue to be in a neutral market. If we look at the market pulse, again, not so dissimilar, but a little healthier than Manhattan. In terms of staying in this neutral market zone, we can see that we'd kind of gone up at the end of the year, beginning of January, and now we're starting to go back down. As you've heard me say previously, a big part of that had to do with the supply and the demand kind of keeping pace with each other. But now that we're starting to see more supply, that could soon change. Here are those detailed charts that I like to share with you, showing price per square foot, supply, pending sales, median sales price, days on market, all those things that are good to know, especially if you are an active buyer or seller. The supply chart in Brooklyn shows a supply of about 2,860. That is down 0.6% from year to date, down 7.2% from last month, and down 10.7% from last year. The Brooklyn pending sales, again, these charts are for all property types at all price points in Brooklyn. 1,549 pending sales, down 6.6% year to date, down 11.8% from last month, and down 39.3% from last year. The monthly contract activity, again, for December, we're seeing 414, which is down 15.5% from last month and 43.2% from last year. If we look at the historical averages for December, we see those are typically a little higher for signed contracts, 593. This is giving us an idea of kind of where we sit if we take a much broader view of the market in terms of contract activity. Again, Brooklyn has fared better than Manhattan overall. And so it'll be interesting to see if it continues to do so as the inventory continues to rise. We'll see if the Brooklyn demand rises as well. Okay, that is it for the Brooklyn market, and that's it for this week's look at the state of the New York City real estate market. Again, my thanks to the Olshan Report and to Urban Digs. I will be back next week with the very latest news on what's happening in the luxury market, the Manhattan market, and the Brooklyn market. In the meantime, take care.